Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, back home on the Lal Street, the market continued to rally amidst the no confidence discussion in the Lok Sabha. The Sensex closed with over 100 points gain and the Nifty ending well above the 11,000 mark. The wheat caps outperformed as well on Friday. But how the Qs stacked up for today? Nigel joins us for more. Nigel, a lot happened over the weekend, so a lot of Qs to really track this Monday morning.
Absolutely. A lot happened over the weekend. First of all, good morning to both of you. And on Friday night, I think all of us were busy in that, the no confidence war, talking about hugs and wings, etc. But, let's get back to the markets. The Qs overnight were more or less flattish, as you all have been mentioning. Asian markets under some pressure. The SGX Nifty, for starters, is indicating a flattish start. In the past week, well, the markets were more or less flattish, but the pain was seen in the broader markets, particularly the BSE small cap index. And from the highs, we are talking about the Nifty being only around 100, 150 points away. The mid cap and the small cap space, they're nearly 17 to around 27% away from their highs. So that's telling you the kind of pressure. But, just to sum this market up and the way it's reacting to some numbers, you should pull up a few stocks and the way they reacted in Friday's trading session. Bajaj Auto, that in fact saw a run up in a month ahead of its numbers. It gave off everything on the day of its numbers. It trades at around 16-17 times its forward earnings. The market just ignored that. They said the results are bad, sell it. Bajaj Finance and CEAT, those numbers were very, very good. And in fact, it was well reported. So the market, particularly with Bajaj Finance, doesn't mind paying even 5-6 times price to book value. But in fact, they want to buy the performers. Last week, if you look at it, I'll be worried about some of these metal stocks because the smaller metal stocks, Tata Sponge and JSL Stainless, both of them reported very good numbers, 45% profit growth. Both of them ended with cuts of around 12%. This is just for Friday's trading session. For the week, it ended with cuts of around 10 to 12%, telling you all the good news has been factored in with some of these numbers. The FI flows, they have been selling. The DIs, they are offsetting all of that, not just in last week, but even in the month so far. And in Friday's trading session, the FIs have added five shorts for one long. They're bought protection on the downside, but the good part is they're writing puts as well. And now, in comparison to the start of the series, the FIs, they're net long, because the long positions have moved to nearly around 54%. At the start of the series, it was only around 35%. So they are net long on the index. But in the last week, what stood out, and I'm sure Mangalam is going to cover this later, in terms of puts, they bought 1 lakh put contracts. They bought 10 puts for every one call. But in fact, they wrote more number of puts as well. So nearly around 5 puts is what they wrote last week for every 2 calls that they, that we were talking about. Finally, what are the levels you're looking at? 10,800 put, that has the maximum open interest on the downside. So that should seek some kind of support. On the upside, we have seen the Nifty do a U-turn from around 11,070. So keep an eye out on that mark, 11,070 to around 11,100. That should be a bit of a resistance. But you've got a problem this morning because the HDFC Bank's numbers, they didn't really meet street expectations. I was reading a couple of, brokerage notes as well. Valuations are quite richer there. And it's the big boy in the index. So, it's a 10% weightage out there, 10.5%. One of those stocks will have to play a good innings today to offset in case HDFC Bank, if it's down 1%, it puts a lot of weight on the index on the downside. The loan growth was good, but otherwise, the NII, the operating profit and the profitability, all of them were at multi-quarter lows. So keep an eye out on that stock. We've got a bit of a problem if it opens 2% lower.
Absolutely, Nigel. It will be very interesting to see what happens once it opens lower as well.
Whether that dip is bought or not.
Whether that dip is bought or not. That's something that the street will be watching out for. You spoke about a couple of stocks. What are the others that you're watching out for?
Keep an eye out on Wipro. The numbers looked a tad bit better than what, those low expectations. Remember, it trades at a big discount. It's trading at around 14 times its forward earnings. Its peers like Infosys and TCS are trading at around 17 to around 21, 22 times odds. So let's see what kind of a reaction we should see. It could be mildly in the green. MCX, well, the average daily turnover, that jumped up by nearly around 30%. That's the highest average daily turnover in the past 13 quarters, though the profit number will not reflect that because it was impacted by lower other income. So that stock could open up in the green. L&T Finance, that stock could see a bit of a knock because now the stressed assets that can turn bad has moved up to nearly around 8%. Remember, the past quarter, the gross NPA is only around 4.5% odd. South Indian Bank, well, the loan growth was the highest in the past 8 quarters, while The gross NPAs, that's been in fact, quite horrid, the worst ever for the bank. So mixed set of numbers coming out of South Indian Bank. I don't think the gross NPA numbers will be taken very, very well. And the NIMs as well, lowest in the past 12 quarters. Havells, Anisha was telling us those numbers were good. Margins of around 12.5%. That compares with around 10% that they have been doing in the last few quarters. So that stock should get a thumbs up. Bata really running away. Mangalam will tell us about that. In fact, those numbers look much better than what our poll threw up. And good results. You have Keval Kiran, Bulgaria's, Shesasai Paper, all of them. Good set of numbers there. Reliance Naval, what's going on there? Top line, big degrowth, and the losses have expanded to around 350 crores now. So that stock, I mean, it's a very small stock, but you'll have to keep an eye out on that one as well. Over the weekend, Sonal thought she's going to have a rest. That UPL transaction has been announced. They have signed the agreement to acquire Arista Life Science and its subsidiaries. Remember, the stock has corrected 40% from its 52-week high, and in the last 3 months, it's down nearly around 30%. So there's bad news. Most of it should be, factored in. CLSA buy rating with a 940 rupee price target. Other news, you have SpiceJet over there. That stock could be in focus. The arbitration tribunal, they've ruled in SpiceJet's favor against its former promoter. So keep an eye out on that stock today. Phoenix Mills, they've entered into a JV to develop and manage a retail mall in Ahmedabad. So keep an eye out on that stock as well. And results today, you'll be watching out for United Spirits, ACC. It comes out, by the way, post Marketas, L&T, Infotech, Hindustan Zinc, V-Mart. All of them come with a set of numbers. And finally, some of those GST rates were tweaked over the weekend. Keep an eye out on all those stocks. Consumer durables, you had it reduced from around 28% to around 18%. Building materials, FMCG, and footwear. Before that, only up to 500 rupees. 5% was the GST rate. Now that 500 rupees increased to around 1,000 rupees. So there'll be some reactions there as well. But the problem this morning should be HDFC Bank. Let's see who can combat that.
You're watching this Monday morning. The GST Council in its meeting on Saturday slashed rates from 28% to 18% for a slew of products. Here are some of the highlights. Washing machines, refrigerators, TVs, etc. will now be in the 18% slab versus the 28% slab earlier. For TV, remember the caveat is it should be less than 65 centimeters or 27 inches. Earlier, rates on paints, wall putty as well as varnish. Also, all leather products are now down from 28% to 18%. Sanitary napkins have been put under the exempted category, which were earlier taxed at 12%. Here's a slice of an exclusive conversation with Sushil Modi post the GST Council meeting on how the states will come out of the revenue deficit and the future course of action for the GST Council itself.
In the year 2017-18, overall revenue deficit was about 17%. Now it has come down to about 13%. So if you take the entire country, so the revenue deficit is not more than 14%. So ultimately we are, all the states, some states like Bihar, Puducherry, Punjab, they are having a much bigger shortfall. But states like Maharashtra, Tamil Nadu, many of the northeastern states, so now the gap is very less.
So one last question. What do you think should now be priorities of GST Council, given that rate rationalization has also taken place? What should be now the future course of action when we talk of GST?
It's a simplification of the entire system. So in the next 6 months, the enforcement through e-way bills and other things, and simplifying the return. So I think these will be the two main priorities of the coming months.
We also spoke to paint companies and white goods manufacturer Blue Star on what will be the impact of this GST reduction and rationalization. Listen in to their view as well.
That's good news. Actually, it should have happened earlier as we have been talking about this because I don't know why paint was chosen to be one that was left out of the earlier reduction which happened for all building materials of this nature. So I had explained earlier also, that this needs to be done. From the IPA standpoint, we had made numerous representations to the government explaining our stand. Whenever the taxes go down, and then this is a substantial difference, obviously it will kick up volumes, that's for sure, because, and the season is coming, which is, right on the doorstep. And we expect that, therefore, the seasonal volumes will be, quite impressive for all the paint companies this year.
We have had, 16% volume growth, so I don't see whether there was a destocking which took place because as it is, I think dealers are keeping low inventory. I'm only worried about the dealers who are in the composite, scheme. Other dealer would be able to immediately get the credit, and they don't lose. But people who are on the composite scheme, I think they may be affected. So we will have to examine that. And I don't think there was a destocking which took place, and 16% growth indicates growth was good and there was no destocking.
The government's intention will be to kickstart the industrial production, accelerate it, and also create feel-good factor. That's what I believe. If it is indeed so, I would like to caution the transition rules pertaining to this, what it will be, number one. Number two is the price should be passed on to the consumers. And three, we all had a poor summer, and I suppose the festival season will be fantastic. The industry had been asking 28 must become 18%, at least for inverter and 5-star air conditioners, which are higher energy efficient machines.